And it always strikes me like real estate investment it's a bit like the difference. Real estate investment compared to the floor is a bit like the difference between athletics and Tai Chi. Real estate investment is kind of like the slow moving thing, but then it all suddenly happens. Whereas it's actually, I think that was the biggest difficulty for a lot of people was, I wouldn't say everybody had ADD that was on the floor, but they were used to everything happening bang, 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 bang. And the idea that even the best property transaction takes days to close, if not weeks, and there's all sorts of issues. And I mean, people just go deranged. And then you have to sort of mess around in order to transform the value or whatever it's going to be. And that takes ages. And it's a totally different Zen state, which becomes very difficult.
You have to take what you know and understand at the end of the day, you're not going to know where you stand, and you have to be a builder. So there were people on the floor like myself that were builders. We would have done extremely well in Silicon Valley had we known how to program, but we could have been great business development people too. The one thing that I think traders have over virtually everybody, and I'm talking about back in the day, is just this insane competitive streak where they will get up earlier than you. They will work harder than you. They will do anything it takes to win. And you have to figure out a way to channel that energy and ethos into a different sort of occupation. And it's tough because you don't get the immediate gratification that you got on the floor. You'll see it like dopamine hits, right? So people get addicted to dopamine on social media, same thing on the floor. So everybody was kind of like that. But, some of us made it, some of us didn't. I didn't, but I figured out a different way. And it was a dark time. It took me from 2009 to 2016 to really see the light of day. And in all that time, though, from 2007 to 16, I was making angel investments. And then we raised a very small fund in 2016, which now has sunsetted. The fund is closed to new investments, but it's doing quite well. And ironically, my partner was a computerized trader that had never ever seen the floor, that had worked for GetGo. So it was a melding of worlds. We don't talk about trading, but tell me.
So it's interesting though. I mean, I'm fascinated. What caused you? I mean, what was the catalyst that you saw this opportunity in the startup angel investing field?
Well, there were a number of things that happened. Number one, when you were on a trading floor, because there was a concentration of money there was always some deal flow happening. Mm-hmm. I can remember my buddy invested in this train that was going to go around the world and do this bicentennial thing. I mean, it was a loser. Somebody invested in oil wells. Everything was always a loser. It wasn't good deal flow, it was deal flow. And you had a risk appetite as an investor. The other thing about trading is, if you're a good trader, you looked at the market, you looked at the macro market, you looked at the charts, you looked at all this, and then you had to make a gut decision, right? And then you had to put your money out there. And if you made money, you made money. If you didn't, you had to figure out how to get out and get out in the best possible way. With angel investing, of course, it's Roach Motel because there's no liquidity if you really do want to get out. Yeah. And then you had risk analysis in trading, like how much capital am I going to commit to this trade? Well, same with angel investing. What's my check size? What should it be? How much risk should I take? Oh, they're doing another round of fundraising. Should I press my winner? Should I put money in? Or is my money better allocated somewhere else? So you have all these similar sorts of decisions.